A name stood out when the world of cryptocurrencies emerged from its infancy: XRP. As the cryptocurrency industry matured, XRP showed potential. It's now generating headlines for all the wrong reasons. The value of XRP has plunged due to the disassociation of prominent cryptocurrency asset managers from the coin. In addition, Ripple, a business usually connected with XRP, faces a lawsuit that might jeopardize its long-term viability. Ripple and XRP have been under the microscope for some time now, and the world has noted this. This piece discusses the volatile world of cryptocurrency in further detail. We'll look at XRP, Ripple, and how one of the promises for the future ended up on the wrong side of history in this episode of Company Forensics. Though it's typical to believe that XRP and Ripple are the same, this is incorrect. First and foremost, let us discuss Ripple. Ripple was created by Ripple Labs in 2013 and was formerly known as OpenCoin. Essentially, it was a financial service that allowed a global online community with safe and secure payment choices. Every user would be willing to provide credit to other members of their social networking network. Briefly stated, suppose that each person becomes a bank. This decentralization distinguished it from its most significant rival, Bitcoin. At the time, Bitcoin's most serious concern was that it was still reliant on centralized exchanges and lacked the security necessary for widespread adoption throughout the world. Several large Bitcoin exchanges, including Mt. Gox, has been hacked, exposing these flaws. As a result, by 2014, many people saw Ripple's concept as a game changer. Experts have even predicted that Ripple would either assist or hurt Bitcoin in the long run. Please note that we haven't spoken about XRP yet, where it enters the picture. Because Ripple had shown such potential, it seemed logical to develop a cryptocurrency to go along with it. As a result, Ripple Labs contributed to developing the new cryptocurrency XRP. A dependable infrastructure like Ripple and digital money created mainly seemed to be a winning combination. Cryptocurrencies have been battling to shift public perceptions of conventional banking on an ongoing basis since their inception. However, because of the volatility of cryptocurrencies and the continued influence of traditional institutions, the move to widespread cryptocurrency adoption is taking a long time. Consequently, Ripple made a case for itself as a platform by emphasizing the ease of doing things. Anyone and everyone would be thrilled with the prospect of sending money across the globe more cheaply and quickly. By the beginning of 2020, the firm seemed to be making strides towards achieving its objective. Ripple announced in February 2020 that it has entered into a partnership with Azimo, a well-known European money transfer provider. In addition, it transported $24 million between the United States and Mexico in a single week. At the time, Azimo's CEO Richard Ambrose claimed that Ripple's solution had reduced transfer costs between the Philippines and Europe by anywhere from 30 to 50%. Ripple, it seems, was enjoying a successful run. However, we should not forget about XRP, which was also doing quite well. At the time, it was the world's third largest cryptocurrency by market capitalization. And despite experiencing significant ups and downs, XRP has had considerable growth. It had its peak trading value of $3.84 in January 2018, representing a substantial increase over its initial value of $0.002. In the past, the Securities and Exchange Commission had declared that Bitcoin and Ethereum, two of the most popular cryptocurrencies globally, were in fact cryptocurrencies. As a result, in 2015, the Justice Department decided that XRP should be considered a currency rather than security. As a result, the SEC lacked jurisdiction. Remember that securities may be either equity or debt, and that they can take the shape of stocks, bonds, certificates, or other similar instruments. Keep this in mind. If your stocks perform abnormally, the SEC will begin to look your way. Consider the names Jordan Belfort and Dan Bilzerian, and if you haven't seen our film on them, you should. So, given that the SEC had declared Bitcoin and Ethereum to be cryptocurrencies, it stands to reason that XRP was also a cryptocurrency. There is one significant distinction between XRP and the rest of the cryptocurrency world. To comprehend this, we must first discuss mining, a method through which third parties verify transactions between users. As soon as they are confirmed, miners enter them into public ledgers to be used. This procedure is also in charge of introducing new coins into the circulating supply of money. As a result, whereas Bitcoin and Ethereum utilize public ledgers, XRP uses its private ledger. Furthermore, when XRP was first introduced, Ripple generated the limited supply, or all 100 billion units, all at once. In layman's terms, this implies that third parties will not produce more XRP. You cannot add fresh XRP to the circulating supply, since all existing XRP has already circulated. But that's not all there is to it. Ripple now retains around 48 billion of the 100 billion units in escrow, which it may govern and distribute as the market dictates. The fact that Ripple Labs owns 6.4 billion units of XRP, combined with the reality that it is not a currency, makes it seem that it is not a currency at all, and here is where the excrement hits the fan. Legal action was taken when the SEC asserted that XRP was not a currency, but rather security, primarily due to Ripple's handling of the situation. It was announced in December 2020 that the authority had indicted Ripple and two of its executives for issuing unregistered securities for a total of $1.3 billion. It was alleged by the SEC that Ripple, its co-founder Christian Larson, and its CEO Bradley Garlinghouse obtained funds to support the company's operations and exchange XRP for non-cash considerations, such as labor and market-making services in return for XRP. Meanwhile, Ripple and its management failed over the years to comply with these fundamental investor protection laws, resulting in investors being denied access to information that they were entitled to receive under the law. As a result of these serious charges, there has been a heated dispute since the SEC asserts that specific cryptocurrencies are investment contracts. For example, the cryptocurrency XRP falls into this category. However, the SEC was unable to give powerful assertions because of its convoluted and, to be honest, esoteric terminology. While the SEC and perhaps many other individuals across the globe struggled to describe the realm of cryptocurrencies, experts were of a different opinion. Unlike stocks, the XRP does not need any regulatory oversight. However, this is a heated discussion. The SEC's assertions make me question whether anybody is aware of what is going on in the first place. Ripple Labs took advantage of the uproar that ensued. They didn't spend any time responding. Mr. Garlinghouse claimed that the SEC had no cause to prosecute Ripple and that XRP was a legitimate form of payment. He went on to say that this lawsuit was the last shot fired against all cryptocurrencies. Despite his claims, he maintained that the struggle was not finished. Ripple had said on several occasions that it does not dip into those 48 billion XRPs at its discretion. But let us not forget that they now have 6.4 billion XRP. So even if the discussion continues, the harm has already been done, and the world has noted what has happened. While the lawsuit is directed against Ripple, it has implications for Ripple and XRP. Take, for example, asset managers such as Grayscale Digital, which is one of the biggest in the world. When the news broke, Grayscale immediately sold all of its XRP holdings and invested the proceeds in Bitcoin and other cryptocurrencies. Following this massive blow, other huge wallets started to plummet as well. Wallets with more than 1 million XRPs were at their lowest point since October of the previous year. Since the lawsuit was filed, the last third-largest cryptocurrency has seen its value plummet by 75%, and some analysts anticipate that XRP will soon become worthless. To begin with, Ripple may be required to split itself from XRP to fulfill regulatory requirements. Furthermore, such control runs contrary to the decentralized idea that underpins cryptocurrencies. Ripple might attempt to sell off all of its XRP, but the value of the cryptocurrency is continuing to collapse, and several partners have delisted the cryptocurrency. However, even if Ripple goes bankrupt, the XRP cryptocurrency will continue. On the other hand, this example serves as a stark reminder that we are still in the early phases of Bitcoin development. It's possible that 5 years from now, we'll be discussing how Ripple once showed promise before disappearing over a cup of coffee that we just purchased with our Bitcoins. The argument around cryptocurrencies is likely to get increasingly heated, and it may become difficult to follow at times.